Taco, today we are going to talk about some sad news. Unfortunately, one of the better investors of this planet, Charlie Munger, passed away on Tuesday. Wasn't
Yes.
it was the right hand of Warren Buffett. Yeah, legendary persons, of course. And we're going to talk about the five main tips or advices that Buffett gave over all these years. But what I want to do first actually is I want to deep dive into the charts.
Yes.
So the month of November was a very good month. I think it was one of the second best month since a couple of years. So we went up almost with 14% in the S&P 500. So a lot of investors were a bit sad when the summer was over because the market since August was going down, and all of a sudden, boom! There it was. The interest fears were gone, and the market went up dramatically. But how far or how long will this continue? One of the tools that you can use for that is technical analysis. And without going into too much depth here today, I want to show 3 technical indicators that give you some thoughts on where the market is at this moment. So I want to start off with the relative strength index. The relative strength index is a pretty easy to understand indicator. It basically moves within a bandwidth of 30 and 70. 30 is green, 70 is red, and then you see a line in the middle of that which shows you whether the market is overbought. It is over too much buyers. Too much buyers, never too much buyers, but there have been a lot of buyers when the market is above the red line, and green when a market is oversold or a stock is oversold. You can implement this on any individual stock in your portfolio and have a thought about maybe if you think about should I take some profit, etc. Well, you use the RSI to see where it is, if there's some the signal is neutral at the moment, etc. So what can we see? That we have been moving since the middle of November above the 70. Well, that happened a couple of times before. For instance, in July, we also have been moving above the 70, and you see that indeed the market went down. If you look here, end of October, the RSI was at 30 or below 30. What happened? Bam, we went up. You look here, this is for instance September last year, market went down in the summer quite drastically. What can you see? RSI at 30, market bounces. So I'm not trying to make you afraid here or scare you here, but we can see that the RSI is showing that the market is overbought. Adding another indicator, this is the MACD, the Moving Average Convergence Divergence. And I always have difficulties to say it because it's a difficult word for a foreigner, but it basically gives you a thought about the changes in a movement. So if we see here at this moment, you see a bar line, green and red bars, and then 2 lines running across that, and we have to add some periods, a longer period, a shorter period, and the MA period. Well, what can we see is that when the divergence becomes red, so when these bars, they show that the signal or the trend is weakening. So basically we're going from positive, the market is going up, green, 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 and now you see it's getting down. So we see that the strength of the move up is slowing down. Then you see 2 lines, that's the long line and the short line, to say it easy, because I want to make it easy for you. When the long line moves from above down the short line, it is an indication that the market will correct, that it will go down. And just to have some reference for yourself, we see here August last year, we see the divergence becoming negative, and it takes almost 3 weeks for the long line to cross the red line. And then indeed, at this same moment, the market starts going down. What we're seeing here, almost 3 weeks, divergence is getting more negative, the trend is weakening, and we see the cross. Interesting, isn't it? And then the last indicator that I want to share with you, and if you like this, please give me a thumbs up, is the Bollinger Bands. The Bollinger Bands is a bandwidth around the current price chart of, in this case, the S&P 500. And what can you see is that when the price line is hitting the top red line, red again, stop your position long, you should go short or you should step out. And also when the bandwidth is getting wider, when it's getting wider, normally it's something, volatility is happening, or and now you see when they move together, the volatility is squeezing. So you see that there's less movement. I'm not going to talk about the volatility here, but because we can talk about this for hours. But you see that also here you have one confirmation that the market is overbought on the RSI. You have another confirmation on the MACD, and then you also have a confirmation with the Bollinger Bands that maybe the best part lies behind us. It's also quite logical, no? Because a market that went up in a month 14%, that is, I mean, if you start investing at the end of November, or end of October, sorry, then you say, well, that is nice. Investing is nice. I make 14% in a month. Hey, so, but that is of course not normal. So that doesn't happen every month. So use this for yourself if you're looking. Use this as a tool. Use this as one of the elements next to your fundamental analysis, your own vision. Use the technical indicators that I've shown you now, because it's easy to understand, and it will give you something to grab onto. It give you. I mean, we're all looking for confirmation that we're doing the right thing. If you're planning to sell, and you see that indeed the market or the stocks are overbought, as we can see now, you at least confirm for yourself that the technical indicators have given you a confirmation.
Confirming, exactly.
It's confirming that you're right.
It's very interesting.
Now, Taco, we're going to talk about, you're going to give us some insights in the most interesting persons, I think, in the investment world, if you're thinking about fundamental.
I think so. I'm sure they're also, it's really interesting. I'm sure they use this as well, and their teams. People think they are only, Warren Buffett, only long buy and hold, but it's of course not true. We said it before, they're also traders, so they will use this. But on the other hand, of course, they are also very famous about one-liners, about fundamental logical thinking, and I think a combination of both that makes us all better investors, no? At least having that knowledge. So we took some of famous remarks and tips of Charlie Munger. Of course, everything he said might be interesting. Who are we to decide what is a good one? But of course, some things are totally in line what we are trying to do here, I think, with the vlogs, but also, with the conversations with investors. One of them is, for example, you don't have to be brilliant, only a little bit wiser than the other guys on average for a long time. So I think he wants to say with that maybe you should not always be focusing on specific trades or companies, just to be doing your normal thing, on the long term. Don't make stupid mistakes, and try to be a little bit smarter than the rest. And that's what I think we are all trying to be in the market, because the market on total is like, in balance. So you try to do something that's a little bit better, and not only, to outperform with 100%, but just a little bit on the long term. They were confident in doing, and I think they made it come true.
They did something well.
Something related maybe to that is also not, also in their investment fund, not looking for brilliance, but just look for companies that found a specific trick. And that trick, of course, seems like something strange, but I think he wanted to show us, the Coca-Cola, McDonald's, companies that did something that is in the society. You cannot think society without them. No. And they found those companies. Well, if you manage to find those companies, it doesn't have to be the same companies, of course, because what they did, I'm not sure if you can copy it one-on-one. But on the other hand, if you think some company does something special, even though the price is low, but you think they will survive, and for the long term. So that could be a handy tip for you as well. Also related to that, forget what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices. So don't focus too much on the exact entry level and sales price. You must really focus on the company itself. So
long term,
exactly. If there's a bargain in the market, of course, sometimes it can be very nice. But on the other hand, if the fundamentals, the underlying value, if you are not convinced, why should you do it? And I think they didn't do it. They just wait until something.
But it's easier said than done.
I know.
And that's with all these things. I mean, if you think about something, they have a great idea and this should have a takeoff, but then it fails. It happens many times.
But I think also on the other hand, I mean, if people see something is dropping a lot in value, we had we spoke about Philips. I mean, it is attractive maybe for starting investors to buy something in like that situation. But on the other hand, if you are fundamentally not convinced, why would you do it? And it depends on your strategy. If you have a stop loss placed, or maybe you can do something like that, or with options. But I think what they wanted to say is don't focus too much on that price movement. Just focus on the wonderful businesses. The last one, which might be a little bit surprising, because actually he said that he preferred to focus on 5 companies he knows a lot about instead of 100. So it was a little bit against diversification in a portfolio. Of course, we cannot say that diversification is bad, but he called it diversification sometimes. And I think he wanted to say that...
Well, we know clients with over 500 positions.
We do know them, yes, of course. So it's one strategy, but I think if you are very deep diving in a company, I think you have a lot of work to do, even if it's only 5 companies, because if you want to do something, we know clients, they know like the order book of those companies where they are expanding. It's difficult to follow too many companies. So he said, I prefer to do it on 5 instead of 100. And if you are convinced about those 5, I mean, what do you need more? So it's a little bit surprising that diversification.
And it's easier said than done. Also.
It's also everything is easier said than done. But maybe you can do something with those wise lessons of Charlie Munger.
I think you should, and I think you should also give us your thumbs up and subscribe to the channel. And we hope to see you next week again.
Thank you very much.